All right. Hi, everybody. Welcome. Excited to see you on this very warm, summery day. And welcome to Building on Bitcoin NYC edition. We are very excited to be back here in New York. We are also very excited to kick off the summer edition of our Building on Bitcoin series, which, if this is your first time joining us, again, a mass welcome. If you've been here before, this is an event that we do all around the world, both physically and digitally. We've done this in many cities here in the US. We've done it in Europe. We've done it in Asia. We continue to bring this event around the world to educate what's happening around Bitcoin, but also to bring light to what's happening across the entire Bitcoin ecosystem, not just with Stacks, but with all of the greater Bitcoin happenings across the entire industry. Today, I'm your host, Kyle Ellicott. It's a pleasure again to be here, and I'm joined by the one and only Manib Ali, the the creator of Stacks. And today we're going to talk a little bit about what's happening across the board in terms of Bitcoin. We have seen a number of headlines. Manib, you and I were just talking about this earlier today, that Bitcoin dominance is here. Almost 17 years later, after the Genesis block and the beginnings of the Bitcoin network and BTC, Bitcoin is in every major headline. It is a part of every storyline. It is a part of every financial, technical, or just general conversation. What's changed in your experience going back almost since 2013, being in Bitcoin? What has changed between then and now for Bitcoin to become so dominant and prominent?
First of all, hi everyone. Thanks for being here. I think that's a great question. It's sort of like hard to pinpoint like what exactly happened and what exactly changed. If anything, the way I view this is that it took longer than expected, right? So a lot of people, like a lot of Bitcoin people back in even 2016, I'm saying 2016 because that was the start of like Ethereum and a lot of other networks. They were sort of treating it as like, hey, Bitcoin is just going to crush all of this and it's going to be very, very dominant. And frankly, that didn't happen for a very, very long time. Like I think if you go back to, I don't know how many people here were tracking this in 2017. There was the site called, I think it's called the flipning.com, right? And it has metrics. And those metrics were like active users, gas fees, like different sort of like traction metrics, the number of developers, this and that. And Ethereum was like coming like this, that it's actually going to take over Bitcoin. And that was sort of like the thing in the industry. And then there were a lot of these quote unquote ETH killers that were being funded, right? That was that's actually when Stacks raised capital. Late 2017, and we came out with this almost like a completely odd thesis that it's actually Bitcoin that's going to be the primary asset, and we wanna build on Bitcoin and this and that. Looking back, I think we got capital only because of the team and not because of the thesis, because people probably didn't fully believe the thesis. But the team was so strong that they also didn't want to miss out on the investment, and they probably ended. So we were like this like lone wolf funded in a sea of like, hey, everything's heading in a different direction. And I think the part one of that thesis has pretty played out. Like fast forward so many years, and Bitcoin dominance is at 65% and heading towards 70% or something. But the key thing, and this is what a lot of people miss, is this dominance number. Not only that it used to be lower, what it's measured against was much smaller, right? So there were very few other projects against which you are even measuring the Bitcoin dominance. There have been billions and billions of dollars deployed into other L1s, dozens of L2s on Ethereum, and so on. And even putting everything in that bracket, like imagine how many new projects have launched between 2017 and now. Like it's insane. It's like hundreds and hundreds of new projects. and you weigh Bitcoin against it, and Bitcoin is actually more dominant now than it was in 2017, right? And I think that's a um, that's a remarkable achievement. And as you mentioned, that the type of institutional support that's happening with Bitcoin is just unparalleled. And this is typically what happens. Like, I think if you look at, you know, evolution of technologies, the winners end up being way bigger than people expected them to be. And I think that's what's happening with Bitcoin a little bit over here.
And when you talk about Bitcoin dominance, because we've used that term quite often, can you explain what that means? 65% of Bitcoin dominance, is that the amount of Bitcoin's market cap to the overall market cap of digital assets? What does that mean when we talk about Bitcoin dominance in about 65 to 70%?
Yeah, so I think when I say dominance, I typically use the word a little bit more broadly, but this you can just see on CoinMarketCap, and I think they just weigh it by the market cap. And I think that in the end these are free markets, right? So the capital flows wherever people see value, and I think Bitcoin dominance weighted by market cap is an interesting number to track. But it's not just that. I think interesting exercise, if you go back and go to the flippening.com or whatever the exact URL is, you would actually notice that Bitcoin is up against Ethereum in almost all of those metrics, right? So it was almost like they said back in the day that let's measure these metrics, and years later, Bitcoin actually ended up beating everything else on those metrics, and I think that's quite remarkable.
So let's talk about institutions and where capital flows, as you just noted. Last year in 2024, we saw the spot ETFs enter into the market. We saw the initial setting of that bar of almost $41 billion of inflows year to date, and continuing to rise. We saw ETFs sprout out all around the world, not just here in the US, and suddenly have started to see headlines around Bitcoin treasuries and Bitcoin yields in this rush by institutions to get greater exposure to Bitcoin, whether that's BTC, the asset, the ETFs, or now treasuries. Why do you think we see this sudden rise of a trend shifting into Bitcoin treasuries by institutions and capital inflows?
Yes, so I think ETFs are interesting, but in some ways it's a pretty sort of like a vanilla product, right? Like it's just a proxy to you're holding Bitcoin, and it's just sitting in a custodian account somewhere, and you can't even do much with that Bitcoin. Like BlackRock is not doing anything with your Bitcoin. It just sits there. But it is interesting financial plumbing, because now a much larger pool of capital has access to BTC through these ETFs. And I think the much more important thing is what's happening with these public companies that are now putting Bitcoin on their balance sheet and doing these treasuries. And the reason why that's way more interesting to me is they have a lot more freedom in terms of what they can do with that Bitcoin, right? So every company is different. Every company is governed by their own sort of like bylaws and the management teams and so on. Actually, what just Pomp just announced this morning, like if you look at the announcement, so it's around $750 million of capital to go buy Bitcoin. But he's not just saying I'm buying Bitcoin. He's saying we will actually use this Bitcoin to either invest it or earn yields on it or deploy it in a way to maximize shareholder value, which is a very, very interesting statement, right? Like, so if Bitcoin is sort of like this new form of capital, and we are going through this rapid digitization of capital and transformation, now they're smart, innovative people who are coming up and saying, "Hey, let me manage Bitcoin on a company cap table for you." And there aren't a lot of people who can do that, right? And I think the folks who can, the market has seen the results on MicroStrategy and some of the other plays like MetaPlanet and so on. So the market is actually hungry for a lot of these things, and I think that's a very, very interesting dynamic to merge recently.
And it's also changing policy, as we've seen globally as well. So you've got K-Wave in Korea that had very similar language and thesis as Pomp of, we're not just going to buy BTC, but we're also going to invest in Bitcoin infrastructure. We're going to run a Lightning node. You've got companies in Japan, Spain, Europe. I mean, every major country is starting to have a company with BTC enter into a treasury-based public company, which is fascinating to see. And with that said, Manib, talking about the greater Bitcoin landscape. So the ETFs hit last year. The narrative was Bitcoin for 2024. However, there's been a little bit of a rebalancing. Some of those bigger narratives in 2024 might not be as big today. We saw an explosive growth around layers, specifically at L2. We saw the entrance of staking and dual staking. How do you see the Bitcoin side of the industry kind of rebalancing after an explosive year of growth and new technology in 2024?
I think that's a great question. I'm gonna make one more comment about the ETFs and the treasuries, and then come to this. Uh, so think of I think of this analogy that at some point, humans figured out that land on, let's say, Manhattan was valuable, and they're like, let's buy this land because it's going to be more valuable in the future, and I want to hold on to it, right? Um, so that was individuals like me and others like buying Bitcoin directly, like back in the day and later on as well. And I think if you look at the BlackRock ETF, it's like someone figures out that I can actually go and buy a land on your behalf, and you can actually trade my company shares. But all I'm doing is I'm just buying land as well. I'm not doing anything else, right? The real kicker was when people realized that the land in Manhattan is so valuable that you never want to sell it. What you really want to do is you want to convert it into a productive asset, which is like build a building or a business and start earning rental income and some other form of productive income that you can actually get from your land, right? So that's part two, and that hasn't happened yet. And I think these treasuries of public companies are actually a stepping stone towards it, right? So they're not just going to sit on their Bitcoin how BlackRock is going to sit on the Bitcoin on the ETF side, right? So they're actually going to start utilizing it, and it's pushing us towards a Bitcoin economy. People are going to start figuring out how to make money on their BTC without actually selling it, like how to use it as collateral, how to earn yields, how to sort of like deploy it. And it's a digital transformation bigger than anything that you've ever seen before. So with that analogy in mind, once Manhattan is like fully built and there is a economy that's there, and there's like profits and revenue that's generated, it looks very, very different from just buying land when there's nothing built there. So I think we're entering that part two, and coming to part two of it. I think again we were a little bit early, but we saw Bitcoin L2s coming. We saw tokenized Bitcoin being really valuable, and Bitcoin yield being sort of like a big driver of this. Like in any technology, I think it goes through a hype phase, right? So the hype phase would be a year and a half ago. 25, 40, I don't know how you counted. L2s got funded. And I think this is where I would say that Stack stands out because it not only has like market staying power, but it's still an innovator and a leader. I think if you look at some of the work that happened with the Nakamoto launch or SBDC, I'm aware that a lot of projects were going around and basically saying that, hey, we have better technology, we're going to do this, we're going to do that. And then boom, the Satoshi upgrades drop with the self-custodial Bitcoin. Right? And similarly, some of the other ideas around how you can have dual staking and earn BTC directly. So interestingly, the market started cooling off a little bit. And roughly speaking, I think some of the better projects where I actually respect the team and I respect the investors, they're now not even 1/10 of like what Stacks is. Yes, the overall market is down and sentiment might be down, but in terms of relative standing, Stacks is actually now stronger than it ever was compared to the competition. Which, if you're a sophisticated investor, is basically your technology is at all-time high. You sort of crushed the competition. You have an insane roadmap ahead with breakthroughs, and all that's sort of like needed is like executing hard on this roadmap and on this vision. And then the market's going to turn around again once they start seeing like real traction and numbers going up for traction. People will be like, wait a minute, yes, we went through a hype cycle, but this thing is real and it's actually happening. And I think you'll start seeing interest from developers and investors again. But this time around, probably it will probably look more like, you know, how people were rushing to fund Solana applications. I think once Solana sort of like separated itself from the competition, like roughly speaking, Solana is like 10 times bigger than the other L1s, right? So the people building on Solana, actually, they're competing with building on Solana. They're not competing with anything else. And I think that might be sort of like what we see a year from now or something.
So you mentioned Satoshi upgrades. There was a number of big announcements across stacks. We saw SBTC cross over 5,000 Bitcoin deposited, which takes us to number 3, according to bitcoinlayers.org, in terms of the amount of Bitcoin deposited. Satoshi upgrades get announced. A new SIP proposal is put out there. We also saw the SUI integration announcement. Let's talk about SBTC first. I mean, crossing over 5,000 Bitcoin deposited, what does that mean for the bigger picture of the Bitcoin industry? Traditionally, you have Lightning, Liquid, Rootstock, some of the original Bitcoin layers that have sat up on top of that list for a long time. And now Stacks comes from 0 to 1,000 to 3,000 to quickly over 5,000. What does that mean in less than 6 months for the greater Bitcoin industry?
Yeah, so I think that traction is interesting for sure because there are a lot of people in Bitcoin where for the longest time they were like Lightning is the only way forward, and I think that's changing now. But if you're sitting in a group discussion like that and with a straight face, you can say there's more Bitcoin on Stacks than Lightning. Like people will have to take you seriously at that point, right? Like they can't just ignore the fact that there's more Bitcoin sitting on Stacks than Lightning. And I think some of the Lightning stuff is also interesting. Again, I'm friends with these people. I've sort of like supported this technology, but in some ways there are fundamental technical limitations to Lightning, right? If there are channel capacity issues, like imagine someone wants to send $500,000 payment and there are 3 hops on the way. You have to have like 500K, 500K, 500K just sitting idle before that payment can actually go through. That's not the case on Stacks. I can send $100 million, $200 million, and it just goes through. There are no routing issues, no capacity issues. And the one thing that Lightning really had was it was self-custodial, and you can withdraw your capital whenever you want. And with the Satoshi upgrades, like Stacks like hits that right there, that this is fully self-custodial. You can withdraw whenever you want. When you're doing payments, it's fully self-custodial as well. So at that point, it becomes like a 100x better payment solution because it has all the good properties of Lightning and none of the downsides of Lightning, right? And I think that's huge. People are not realizing how big of a deal that is. Because none of the solutions like BitVM2, all the other technologies, they have figured out fully self-custodial, great UX, L2 Bitcoin. And I think we already have it. It's not implemented yet, but I think that's the thing that we'll be running towards. And Lightning is still the biggest Bitcoin project, right? So if you can overtake Lightning as the de facto sort of like payments layer for Bitcoin, and your technology is actually 100x better, I think that's a huge opportunity for putting the Stacks brand and sort of like user acquisition funnel right up there. And we haven't even touched DeFi yet, right? So DeFi is the thing that historically we've been focused on, and where some of this capital is going. And the self-custodial element actually is a major boost for DeFi as well, because both the institutional investors and the large Bitcoin whales, they have these people are risk averse. The institutions are risk averse because of fiduciary sort of like requirements that they have, and the large whales are risk averse because they've seen all their friends blow up over the years, or the last 10, 12 years, and they don't want to do that, right? So both of these people basically have the same requirements, which went into the Satoshi upgrades, that you should be able to mint without trusting any bridge, any signers, anything in the middle, and you should be able to exit. So the security properties that the Satoshi upgrades give them is, like, God forbid, even if the Stacks layer is dead, you will still get your Bitcoin back, right? And you're not depending on anybody else, right? That's the level of security guarantee where they're like, okay, fine, I'll deploy my Bitcoin. So I wouldn't be surprised if there's a 10x or 100x increase in BTC being deployed on Stacks after those upgrades, because it's not that these people, you can't attract them with higher yields. Right now, there's a incentive program that gives people around 3% yield on their BTC. even if you tune this up to 5% or 6%, you're not going to attract that much capital. You might attract like more than 5,000 BTC or whatever. But if you tune down the risk, right? If you eliminate the risk of the signer network in the middle, then people would come even for like 25 basis points or 50 basis points, right? So I think that's the high level decision that we made, that this is the direction we want to go in. We want to reduce the risk to almost none for people to deploy this capital, and I think that's going to be a major step.
I think that's an important thing to talk about too, because you and I are lucky enough to talk to institutional capital on a regular basis, and that's sometimes a fact that might be lost as well, is the risk tolerance to the acceptance of new technology it's just a very different. When you're talking about hundreds of millions of dollars or even billions of dollars, that risk is everything. It doesn't matter how much the return is or what the return is going to be. As we've seen with SBTC, it's BTC in, BTC out. It doesn't matter. If the risk is just 0.001%, then that's something that most fiduciaries that manage that money are going to have to turn away from as well.
Yeah, sometimes they just wouldn't do it because they have fiduciary requirements and they just can't deploy the capital, right? So there's just no option. And then same thing with individuals. You tell somebody who is already sitting on billions of dollars of BTC today, and this is today's price. Like Bitcoin's minimum price in my mind is a million. So this is have a 10x return on your billions of dollars of holdings. Why would you chase a 3-4% yield if there's a risk of actually losing that Bitcoin, right? So it just doesn't make any sense. Yes, you can have small percents of that capital deployed, but you're not going to take sizable chunks, right? So if we are talking about having tens of billions or hundreds of billions of BTC floating around on the L2, you have to figure out a better technology, and I think that's what our next upgrade looks like.
And talking about what's next, I had a few questions that I circulated from the audience before we jumped up on stage. SIP31, that is a very big upgrade and proposal for the greater Stacks ecosystem, but also for Bitcoin as an industry as well. Maybe a quick overview, a TLDR of what SIP31 is and why that is important for Stacks and, again, the greater Bitcoin side of the industry and where things go from here.
Yeah, let me preface that by a little bit that stuff I've noticed in the community or on Twitter, right? Like sometimes I open Twitter and there's like doom and gloom going around, right? Like people are like, what's going on? Like, the price is down or this and that. And I think sometimes it's funny to me because maybe it's because of the different conversations we're able to have with institutional investors and so on. The demand for Bitcoin yield and demand for making Bitcoin productive has never been higher. Like has basically never been higher, right? The technical product, like this is like we've been working on Stacks for years. I think it was December of this year when I started tweeting that I love this product now. Like as a founder, you're like, I actually love the product. Like finally, it's fast. The UX is amazing. You can deploy your Bitcoin. Like this thing works, right? It's like exciting as hell that what the product actually is. And this is before the Satoshi upgrades. Next thing, you've crushed the competition. They were such good projects. Like some of them, as I said, I really respect their teams. I really respect their investors. They took a serious swing at trying to compete. And like some of the bigger ones are not even 1/10 of what Stacks is today. And they're on a downward spiral, right? Because they can't sustain their yields. The people are leaving. You don't want to be in their shoes, right? So you look at all of this, and it looks like this is a massive opportunity to actually start swinging for the fences. And that was the genesis of SIP31. That we have already sort of done the 0 to 1. We've invented the technology. We know how big this market can be. How do we now get into growth mode and execute really fast? And for doing that, you need two things. One is you need enough resources, and B, you need to be organized in a way that you can execute really fast, right? And SIP31 basically hits on both those things. Even at $1 price of Stacks, it's almost like a $500 million round of funding. Which it might sound big, but I think for where we want to go and what we want to do, I think it's a modest amount of capital, also released slowly over multiple years. But just the capital is not important. I think there was so much, I would call it, overhead in the ecosystem because of historical reasons. We did the SEC qualified offering. There are 10 plus different companies and people running in different directions. Yes, we have figured out how to work together, but it's not very efficient, especially with the new environment in the US with regulations. There are so many different tools for growth that we were just not using, right? And all of our competitors are using those tools. So we figured out a new structure around which the ecosystem can become much more efficient in terms of execution. There's so many growth tools that we will have access to, and this is already when competition. We are already crushing the competition. So imagine what happens when you unlock large capital resources and are able to become much more efficient in terms of operations. So I'm super excited about SIP 31. Couldn't come at a better time, because when you go to large investors, you're not just asking for capital. You also want to tell them what's the roadmap, what's the technical roadmap. And I think the Satoshi upgrades are probably one of the strongest roadmaps that I've seen in a very long time. And it's exciting that all of that is coming together.
And another question from the audience I got beforehand is onboarding new users. So right now we've talked about a lot of stats. To recap, we've got over $40 billion of inflows in the ETFs. We've got more than 3 dozen ETFs in Rising, almost 175 public companies in Rising with Bitcoin treasuries. We've got over 7 billion in Rising in total activity in TVL within Bitcoin. We've got over 48 million wallets today with more than $1 BTC. But still, yet, what is missing to onboard the non-native Web3 users into the Bitcoin space and into generating yield or finding productivity around their BTC, in your opinion? What's still missing there?
Yes. So I think in terms of traction, in terms of where the new users are going to come from, I think there are 2 tracks here. One track is what I talked about, like 100x better payments rails than Lightning. I think we can succeed where Lightning sort of like was facing challenges. I'll give you an analogy. Like imagine the rise of stablecoins, right? So stablecoins are actually a better product. They're easier, faster, cheaper to use than normal dollars, right? And I think there's an analogy here with L1 Bitcoin versus SBDC. SBDC, it actually feels like a better product, right? Like it's faster, cheaper, the wallets are better, there are active teams that are integrating it everywhere. And if we have a very sort of like robust payment solution, there was a time when people were trying to integrate Bitcoin payments on websites and it just wouldn't work. It's too slow, it's too clunky, the wallets are bad, Electrum can't talk to your website, and so on. And I think you can have just like, USDC or Tether is now going, I think Shopify just enabled USDC payments on Solana. Like imagine you can just go there, like Bitcoin penetration is at like 2-3% barely. Like there's this entire world on the internet that has never experienced Bitcoin before. And I think SBDC can be the default way that Bitcoin actually moves, Bitcoin payments are done, and people get introduced to Bitcoin. So all of these people, like I wouldn't be surprised if when people get introduced to Bitcoin, their wallet is actually as a L2 wallet, right? And that's how people are envisioning Ethereum and other things as well. We're not the only ones. So I think a lot of onboarding and new users are going to come from simple applications like that. And then there's DeFi and other things. I will first focus on sort of like institutional DeFi. Again, we have sort of identified that self-custodial minting is sort of like the biggest roadblock. And once we're able to unlock it, I think institutional DeFi is going to become insanely important because of the rise of all these Bitcoin treasury companies, because of the rise of this Bitcoin, that not only that it's a nice to have for them to figure out how to earn yields and deploy it better than other people, like that's their job. That's how they're going to differentiate in the public markets, that I can actually get you a better Bitcoin yield than the other guys, right? And that's how these companies are going to start competing with each other, and they're going to require tools like stacks that are the basis of like earning these yields and all these different applications where you can actually go and do this. So I think that's going to be a massive demand factor.
And we're already starting to see the rise of those types of funds and exposure too, not just public companies, but the rise of Bitcoin yield funds that are focused on institutions slowly starting up, open up greater retail as well. Manib, last question here as we close out on this warm summery day here in New York City and building on Bitcoin NYC edition. What is ahead for the next 5 years? It's a big time horizon for how fast this industry changes. But we look at today, we're about 1.5, almost towards 2% of total Bitcoin being productive. We've got the Satoshi upgrades on the stack side. We've got much more happening across the entire Bitcoin landscape and so much else we've talked about. Looking ahead 5 years from today, where is Stacks? Where is BTC as an ecosystem or as an economy furthermore?
So I think there are some layers to this, right? I think if Lightning Network didn't have the downsides, and imagine for a minute the Lightning had a token and didn't have the downsides of capacity issues and routing issues, right? I think it's easy to imagine it would be $100 billion type of a network because of how much it supported. Like Saylor goes around and talks about Lightning, right? Like Lightning is the future and so on. Imagine we have actually unlocked that 100x better Lightning product, but we do have a publicly trading token, and we do have amazing developers who are going to do and build amazing applications with it. So I think that is very exciting, and it's going to play out in the coming years. The other thing is that with all the Bitcoin treasury companies, I have this joke with my friends that whenever they tell me like this guy is a billionaire, I was like, does he have 1,000 Bitcoin? Because if he doesn't have 1,000 Bitcoin, he's not going to be a billionaire for a very long time, right? So I think that's the new definition of a billionaire. And I think that these public companies that are now going out acquiring like 5,000 BTC, 10,000 Bitcoin, and everyone's like, oh, this is going to come crashing down hard. How is it going to come crashing down hard when they have 10,000 BTC on their balance sheet, right? And Bitcoin is actually going to become that much more valuable. So I think watching that is going to be super interesting because I don't think a lot of people fully realize what's happening. Bitcoin is getting soaked up by some of these companies, and I've seen this happen. Like I've seen this happen where there were some projects, I'm not going to name them, they raised their capital in Bitcoin. They executed poorly, but Bitcoin just kept going up year after year, year after year, year after year. And now it's been like so many more years, and they're still sitting on so much capital that they don't even know what to do with it, right? Acquiring Bitcoin in large amounts at any point in time is the best financial decision you can ever make. And all these companies are now doing it. There are like hundreds of companies, like what Pomp announced. It's happening everywhere. And I think these companies are going to become so important moving forward. Like who actually controls access to that Bitcoin? How do they deploy it? And are they plugged in? What rails are they using? If Stacks goes out and basically just wipes the market clean in terms of integrations and in terms of business partners and having meeting all of their requirements, right? Like, can my qualified custodian deploy? Yes. Are you integrated on this DeFi platform? Yes, right? Like you just wipe the market clean with all those connections and all those integrations and those business relations and deploy that capital in and become the de facto Bitcoin rails. I think there's a world where Stacks is, the Saylor always says that there is no second best. I think there is a second best asset, and that's the one that actually gives you a Bitcoin yield, and it's called STX.
Very nice. Thank you very much, Manib. Can't end on a better note than that. Appreciate it. Thank you all very much for coming today. Welcome to Building on Bitcoin NYC edition. We'll be available for questions, but outside of that, enjoy some coffee, get some swag, and stay cool and hydrated here in NYC today. Thank you very much.
Is there a question in your mind today? Is there a question in your mind today? You can be free. Somebody asked me, just be ready so you can be free. Somebody asked me, just be ready so you can be free. Somebody asked me, just be ready so you can be free. Somebody asked me, just be ready so your life can feel this warm spirit in my soul.